What are you most closely watching right now?
Yeah, I mean, both of those are the key indicators that we've got our eye on. But first, let's get through this jobs data today, because we're supposed to see a continuation of the weakening that we've seen earlier this week in some of the jobs data. So we're going to see a slowdown in the number of jobs that were added in the month of July from the first half of the year. But that doesn't mean that the wheels are falling off the bus within the jobs market. I think it's still a really tight jobs market. Wages are rising. People are returning to the workforce. And the bottom line here, Brian, is that demand for workers still outstrips supply.
Yeah, it certainly does. Now, I'd written on LinkedIn the other day, Lindsay, that I felt that big jump in credit card debt with rising rates may be the biggest threat to the economy. I understand that debt service is still low, not historically low, but close to it. But it is rising. I think that may be the biggest threat to the consumer economy right now. How do you read it?
Yeah, I mean, I think that's something we definitely have to keep an eye on. But overall, when I look at the consumer, I still see a really healthy consumer. You know, at the end of the day for the consumer, it comes down to having a job and seeing wage increases that can help at least keep up with some level of the inflation that we are seeing. Granted, consumers certainly are. They are digging into their credit. They're using their credit cards a little bit more now to pay for the cost of those higher prices of goods, but they're still spending on a real basis. It is still up. So the consumer isn't willing to give up on spending, especially on services and experiences that they haven't been able to spend on over the past several years. They still have a decent amount of excess savings. They've only worked their way through about 45 to 50% of that. That should get us through at least the beginning of next year. And so overall, I think the consumer, when you look at them right now, they are still on healthy ground. Granted, like I talked about the jobs market, like you talked about credit, there are some moving parts that we've got to keep our eye on, though.